Hello, it's Eric here, and in today's video, the dirty trick we're going to talk about is very much related to the previous video on crypto lending. And so today's topic is, I hope I'm pronouncing it correctly. It's I think it's re-hypothecation, yeah, re-hypothecation. So basically, it means that you are recycling the loan collateral again and again and again and again, yeah. And it's really a dirty trick. It's a very risky trick as well, yeah. And so what happens is, well, let's start with a loan, yeah. So let's say, for example, you want to borrow some money to do some crypto trading, yeah. And then so you pledge some collaterals, yeah, like for example some bitcoins and some stable coins, yeah. And then so what happens is, so you take the money and then you do crypto trading, and then the collaterals like the bitcoins and then the stable coins will be possessed by the lender, you know. And so therefore, you cannot use it again and again and again and again. And typically in traditional finance, you really cannot use your collateral again and again, because let's say, for example, you borrow money to buy a house, yeah, that means you are borrowing a mortgage loan, and so therefore, if you borrow a mortgage loan, then your collateral will be the house, yeah. And the house the house title deed would typically be transferred to the bank, yeah, the bank lender, yeah. And so therefore, you cannot use the house title deed to borrow another loan, yeah. And then, for example, if you borrow money to do your share trading, yeah, that means you take out a margin loan, and then the collateral typically will be the shares, yeah. And then so the shares will be transferred. So the collateral in this case is the shares, and the shares will typically be transferred to the margin lender, yeah. And so therefore you cannot use those shares to to borrow another loan, yeah. But in crypto lending, the landscape is a little bit different, you know. And so basically what happens is that if you borrow money to do crypto trading, and you pledge some collateral, like for example some bitcoins or some stable coins, and then the crypto lender will not possess your collateral. They will not take away your bitcoins and then your stable coins, yeah. And so therefore, voila, now you can use those collateral to borrow another loan and then another loan and then another loan and then another loan, yeah. And so therefore, the way they do it is like, the way they say it is like this, if you use a collateral again to borrow a second loan, then it's what they call re-hypothecation, yeah. And then it doesn't stop there, you can use the collateral to borrow a second loan and a third loan and a third loan and so on and so forth, yeah. And so therefore they say it is actually re-hypothecation to the degree n, and so that means basically you are recycling the collateral again and again and again and again, yeah. So for example, the original crypto lender is not going to take away your bitcoins and then your stable coins, so then you can use those bitcoins and stable coins to approach the second lender, for example lender 1, and then to ask for another loan, yeah. So let's say, for example, this lender is also not going to possess your collateral, then you're free to recycle your collateral again, yeah. So you take those collateral to lender 2 and then ask for another loan, yeah. And then again you do it again and again and again. Suddenly, you have borrowed a lot of money. You can do a lot of crypto trading, yeah. By just using one set of collateral, you can borrow lots and lots of crypto lending loans, And then so then you may be wondering, the crypto lenders, they're not stupid, why are they taking on this risk? They know that you are taking the same set of collateral to approach another crypto lender and another crypto lender and then another crypto lender. Why doesn't they, for example, the first lender require you to surrender the collateral, yeah? Why don't they force you to do that? Well, the reason is very simple, because the crypto lenders they want to make money, So when the crypto market is hot, so then no matter what risky crypto trading you do, it's not going to make much loss, In fact, you're going to make a lot of money when the crypto market is hot, yeah. So therefore, the crypto lender is perfectly happy to lend you the money, to do whatever you want, yeah, when the crypto market is hot. And at the same time, they can charge you a very high interest, So therefore, all the crypto lenders are in the same competitive landscape. So therefore, they are very eager to lend you money, yeah, to do crypto trading when the crypto market is hot. and they're not going to ask you to surrender your original set of collaterals, yeah. And at the same time, they can charge you a lot of interest, in the process, And of course, when the crypto market tanks, yeah, that is a completely different story, yeah. Then the crypto lenders will scramble, to ask you to surrender your collaterals, yeah. But that will be reserved for another video for another day, yeah. All right, so this is a really evil way of, borrow money, yeah. It's called a re-hypothecation. All right, I'll see you then. Bye.